Fred, lay it out for us. If you were playing the prediction game, which I know is a dangerous game to play, but we were just even, I don't know if you were listening to Joe and I before, thinking through the permutations of what just happens, not just in Russia, but perhaps, depending on what happens with China, how this could all go. And is there a game of dominoes here, a dangerous game of dominoes?
Oh, I think there's no doubt that President Xi is looking at our response in Ukraine and saying, look, if the EU, if NATO, if the United States can't stop Putin in Ukraine, do I really have to worry about anything in Taiwan? And he's not going to do a full frontal military attack on Taiwan either. But he'll see the hybrid approach, he'll see the cyber approach, and he'll see whether the West can actually have any sort of lasting way of standing up to it. And don't forget that President Xi and Putin a couple of weeks ago did a joint statement on the first day of the Olympics, 5,300 words, and there were some real Orwellian parts of it. But the bottom line is, this is the first time since World War II that the two leading authoritarians of their day have made common cause the way they do now. And that's going to influence technology standards. That's going to influence international bodies. So what's at stake in Ukraine is much larger than just Ukraine.
Hey, Greg, when Fred says that, I think a lot of people hear that and they get anxious. But right now, the markets and investors don't seem to think that this is, dare I say, that big a deal. They seem to be much more focused on the Federal Reserve. Is that right?
I'm not sure that's the case. What I think you're seeing is that the market is relieved that there were very few or little direct energy sanctions. That's the inflationary part of this. The direct inflationary impact is obviously what energy prices will rise to most predominantly in Europe. Certainly we'll feel some effect here. But the secondary inflationary effect is those industries in Europe that are dependent on energy as a primary input. And so metals, mining, things like that further exacerbate inflation here as they further impair the supply chain. And so I think that we are going to teeter on this every day, Andrew. Right now, we haven't had our president come out and say anything explicit about energy sanctions. And I think that gave the market a bit of a respite.
But Fred, are you surprised? I know you're not a markets man per se, but you've been living around this world for quite some time. Is the market taking this seriously enough?
I've never quite understood how the market prices in geopolitical risk, but President Biden is facing the biggest group of geopolitical risks of any president in 30 years. It's not just Russia and Ukraine, it's China and Taiwan, it's Iran crossing the 60% threshold for nuclear enrichment. And Israel's not going to stand by and just watch that. But money needs to find a place to go, and the U.S. still looks pretty good compared to the rest of the world, and so somehow it seems to be okay. On the energy front, I think the question is less the U.S. putting on energy sanctions and more if the sanctions get tougher and tougher on Putin, will Putin shut off energy to Western Europe? Germany is 40% reliant on energy supplies for Russia. I mean, it's nutty that they're in that position. They put themselves in that position themselves by shutting down nuclear. We've only also seen the beginning of the sanctions. I think yesterday was a credible start and a good start. But the next steps, as I hear it from U.S. officials, will be going after more major Russian banks, so VTB Bank, Sberbank, Gazprom Bank, and it will also be going after semiconductors, chips, things that the U.S. licenses, not just what it makes, but licenses around the world. This is what was done during Huawei. And that could have a real hit on the Russian economy. And then I think you could see that the markets are underestimating what the impact could be.